Oh shit, it's all fucking closed. What the hell? Oh, it sucks.
Okay. So if I can draw out my daily level, and if I can see it, I can take once. Okay. Depending on where you are at, so you can actually hold for 30%. Sometimes by looking at previous days and level, you can actually hold it all the way down. Like right here, when we took the puts, when SPY double top yesterday, let's say you chase puts right here, you missed the double top, would have been a nice, very nice entry, but that's all about guessing. It could always break out from double top and make new high. But if you were to play puts, where do you aim for the, if you were chasing puts here, you would have to scalp out quickly. But if you are looking at playing the longer time frame, you look to your all you gotta do is look to your left. Because when we were losing this value right here, when we lost this pre-market low on Wednesday, there's nothing left over here. There's like nothing. There's no level left to say where there's a support where SPY is actually holding up. The only one I could hold up is right here, all the way back on Tuesday, December 23rd. So you could have chased or we bought the puts. Sometimes you can hold for 100%, 200%, but in theory, 30 to 50% profits is where you want to start scaling out. But if there's no level, if this SPY doesn't have any level on the left, you can actually hold it all the way down. Like, right here, we will lose and make a new low. Like right here, if we're to lose, we have to go like to your left, like right here on Monday. So you were to play on Tuesday, you can look to your Monday level. Vice versa, if we were to lose this level, you have to go all the way back to some other days and right here. But your stop loss should be around 30, 35. Sometimes it's about price action too. If you were to play 0 DTE, stop loss would have to be the price action. Where do you think it's going to break out? Sometimes it moves really quick to be down 20% real fast, and then all of a sudden it goes back up. But if you were to play right in the middle of the day, you had to stop loss out quickly. Okay. But yeah, anyway, let's get this started. I can go in more detail. Slideshow from beginning. Okay. All right. There's a few slides just to go through. Remember that losses are a normal part of trading. You just have to accept losses, but you cannot revenge trade. 97% of people that trade the stock market give up, lose money, file bankruptcy, or whatever. They keep taking out more loans, taking out more debts, more credit cards. Don't be that 97%. We want to be the 3% where we actually either make money, have realistic goal. Just because Bowie or me or Iron Man or all of us giving out plays, we do our best to give you guys the best tool to make money. But if you don't like it, cut. Don't follow blindly. If you think the play's not worth chasing, don't play it. You don't have to take every single play unless you have a lot of money. But majority of us don't have that kind of money to play everything. So we have to pick and choose what we think is the best play. Someday 10 stocks are going to be moving up massive. We can't chase all 10. If you can catch 2 of them or even 1, and make money for that day, you are winning. So don't FOMO. So let's say you miss silver for like 3 weeks straight and you decide to chase silver. All of a sudden, you decide to chase silver 500% at the top. Just know that you have to willing to accept losses if it does not go your way. Because we were talking about silver early December, for like a week straight. We were up like 50%. Remember, chasing 50%, 30% is fine. But chasing 500 to 600% at the top, you have to cut your loss. I don't care what stock it is. If you were to chase, 5%, 10%, if it's moving 5, 10%, or if you play in the longer time frame and we are up 30% on silver or some other stocks, any stocks, it's 30%. If it's a momentum play, it's gonna go 200 to 300%. Especially if the hedge funds are starting early. You were talking about hedge funds are buying up silver and gold and aerospace stocks. You can chase 30%, 50%. It's fine, but don't chase at the top. If you chase, you have to cut your loss and move on. Unless you're going to average down, unless you have time on your hand. But I would say 70 to 80% of us don't have the kind of money to average down and pray that it go back to break even. Okay, that's just my trade psychology thing. I know all of us trade like a robot, but human psychology, humans' emotions always kick in. You will see it when I lose on my first trade early in the day. I would start hyperventilating, and I'll be like, "Oh shit, I'm losing. I'm panicking." Yes, it's always say we should trade like a robot. It's impossible to trade like a robot. So here's some of the concept. I do think you're already seeing this a lot of the time. Just to recap again, I always use the RSI a lot. That's telling you where it's been overbought or oversold, either on the daily, under 1 minute, under 1 hour, or the 5 minutes. When it's been overbought, people are going to take profits. When a stock is being oversold, especially on the daily, it will try to bounce back up. No. SPY is the only thing that I look at the RSI, almost under 1 minute time frame. RSI is better with big stocks. You wait for the daily RSI being oversold or overbought. Sometimes, like a Google, it can be overbought and keep on going. AVGO, ASML, stuff like that will keep on making new high. Or Booking, BOK. Booking is the majority, each almost owner of Priceline or the Kayak. It's $1,000 stocks. It's just gonna keep on going, and there's no way it's gonna go down. Even the RSI is even in the overbought. But we're just gonna assume 95% of the majority of the stock, when it's been overbought, it's gonna go down. When it's oversold, it's gonna come bounce back up on the daily. Now with SPY, you can do on a 1 minute time frame. And you can look at, when it's being overbought, wait for the MAC as well. All right. And now you're going to see the SMA. No one uses nowadays, but this is only good if you were to look at on the bigger time frame, especially on the 1 hour, the 4 hour. Now the SMA, let's just say the SMA take the old data. It does not take into yesterday or today data. It's just take really old data, and it's just a smooth, simple line, especially on the 1 hour, the bigger time frame. On the 1 or the 4 hour, the price of a stock like to either stay above. If it's above, it's going to keep on moving. If it's underneath the SMA, just know that if it's underneath the SMA, and I'll show you on the chart too as well. Because with the SMA, it like to stay. If it's underneath, it's a bad stock. It's gonna, you're gonna go puts on that. It's gonna make new low, or it's keep on going down. Like if you look at Tesla the last 2 weeks since Kathy Wood sold this, the SMA was underneath. Now we use the EMA or the MA. We use these two the most. EMA is taking yesterday data. It's just higher exponential weight. If you ever go to finance or going to become a stock market special, going to finance or going to get your license to become a stock trading, you have to know all these acronyms, all these math. But for the most of us, we're not going to memorize any of this or know what to do with this stuff. But EMA is just taking yesterday data and then previous data, and then it just gives us a different moving line. I use this a lot, the EMA. Now the MA is taking today's information and apply that to. Now, if you were to play small cap, the MA is probably the best one to play. So whatever you use, either the EMA, the MA, just stick to one. Don't go into both. Just my favorite is always the EMA, but if I'm playing small cap, I go to the MA because it's taking today's data, and then it just smooth out the average. It moves a little bit different. So that's the two difference between the EMA and the MA. All right. So I don't know what your portfolio size is. I don't know if you have 10,000, 20,000, or you have 50,000 in your account, or most of us are around here, the 1 to 10,000. So you have to be limited to what you can buy. Just don't full size into every single play. So I would always recommend, it used to be a 1/3, but now that's time go forward. I'm changing this to 1/4, meaning you're gonna hold. If you're gonna play a swing, pick the one that you really like. Don't swing everything. So make sure you have 25% is into swing, like long-term swing, either 3 months out, 6 months out, or into a week. Have that, the 1/4, 25% should be momentum play, meaning you're thinking like a Baidu. There's a lot of news coming out. There's a lot of, maybe IONQ. All of a sudden, it's at the bottom, and then there's flow coming in. That would be your 1/4 short-term play, like a silver, gold. In the last 3 weeks or 2 weeks ago, when we would first start talking about silver and gold, that would be first you start out with 1/4 in long-term play in silver, gold, aerospace, and then all of a sudden you start seeing flow people talk about on Twitters, on stock tweets, or whatever or different Discord. If you follow different people, they're gonna start about few stocks. That is where you start throwing your 1/4 extra 25% into that short-term play, taking 3 weeks out, couple weeks out, for that short-term play momentum breakout. So just 1/4 is usually based on charts that you love to play. 1/4, 25% should be momentum breakout or either momentum breakdown. Like Tesla, there was a lot of puts, and we saw them that it's lose every time it touched the 1 hour time frame. It was dying. So that would be your momentum breakout. That's your 25%. Now 50% should always be a cash reserve. Now I used to say it's 30%, but now moving up to 50% should be cash reserve for either for any play that you want to take. Should be in and out at least the same day. You do not want to hold just overnight to wake up to see your port turn red. Just in case that you miss out a potential play, you can throw it in, take a quick snipe, either SPY breaking down, breaking up, or you start all of a sudden hearing news that, hey, we're going to war with Venezuela, either defense sector, LMT, KTOS, RTX, oil, CPX, that would be your momentum, play. You just have the cash to play it. Because if you put all your money into swing, there's nothing left for you to play. And if the market have a really bad day, you have nothing to recover that. So always have at least 50% cash to do whatever you want to do. Should be in and out within a day or two. We can be red on our long-term swing. That's fine, but you must have money to play and cover that red play. If our swing and our short terms are making both money, you don't need to play just SPY or ODT. Always have your respective stop loss, 30% profits. I always say 30% profits, but if you can play SPY and if you can draw your charts and your level out, you can hold for 100% or even more as long as you look to your left. Okay, yeah, of course. And then for your short term, I know your short term should be at least like if you were taking a 2 weeks or play or even OTT, once it passed that 40 to 50% red, it is impossible to reverse it all the way back up on a short term. Meaning the price need to go back to the price that you bought in plus an extra 2 to 3% on top of that. So short term, once it goes 50% red, just know that it's impossible to go back up green. It is possible only if there's news, if there's a massive 6% move in a day. But if you do not see that, you just have to take your loss and move on. Don't hold and pray that it's going to be break even. Because let's say if the price of silver go up and down 3 to 5% each day, just know that if you are out the money, the whiplash will make your contract expire. It would just you're gonna break even though. Don't expect green. If you break even, get out. If a price, that's the whiplash of 3 to 5% moving in a day. Now, if you have a long-term options, yeah, you can actually average down. You have you have 6 months to a year out. You can average down. Yeah, that's fine. But at some point, you have to take your stop loss. I'm afraid never to average short terms because it can always go down and make new low, unless there's let's say you take a option play and it goes down, but then you see in whales buying back up, you see big money coming in. You say, all right, I may average down for this play, but if you do break even, you have to take your profits on. If it's break even, you win. Anything short term is considered 3 months. Anything that's just period is short terms. So all of it it's all short term. So make sure you cut your loss if you don't make it. Now with SPY, your stop loss is based on your price actions. Sometimes we may have bad entry, but if you believe in the charts, if you know that it's been, if it's a particular level, you can actually hold it for maybe 30% and then move. And then when it break even or break green, you can sell out. But remember, never full port. So let's say you have $3,000, right? So I would only put about $500 into long-term swing stock that you love. Now you have $2,500 to play. You may have that $500 to maybe pick a momentum play, like maybe China. Last few days, there's a lot of money going to Alibaba, Baidu. Just the random stuff that you see on Twitter's, on wherever you see, or on Unusual Whale, Tradetic, Black Box Stocks, whatever app you use. If you see money flowing in, and you think that hey, that's news everyone is talking about, I'm gonna put in an extra $400 to $500 into a short-term swing. Now you have $2,000 to play. So what does that mean? You can play SPY, you can play intra-week, meaning don't full port. Never, if you're gonna play with 250, don't go 250, then all of a sudden go into $500 on the next play, or $1,000 on the next play. Thinking you're gonna double that. No, don't do that. Just put 250 per play. $250, that's all you need to do. So you have $2,000. That's give you at least 8 try per day. So the maximum of 8 try, but you don't have to play all 8 of them. You can just need to play, if you hit the first 2 and you make, turn that $500 into $800, that is a win. Now remember, I'm going to tell you the goal is not to make money, not to be financial freedom. If you start thinking, I'm going to trade the stock market to buy a Lamborghini, to buy a new house, that's the wrong mindset. You should be always thinking about, I'm going to try to make the stock market to have a nice vacations, pay up some bills, go out, have some fun, with the family. If you think like that, you're going to win more than you lose. Just think small. Aim small. If you can turn 3,000 into a $200 per day, if you make $200 per day, you're going to make 25. If you make $250 per day, you're going to make 25,000 per year. That's 252 trading days per year out of 365. So you have more than 250 days to play. You don't need to hit a home run every single day, base hit every single day. So if you're in this 3,000 range, just aim for like $200. That's all you need to do is make $100 to $200 per day. Once you hit that, you're done. Now do a journal. I don't know if you guys use a journal or not. Maybe not every single day, but maybe on a weekly basis. Look at the stock that you lose. Pick why did you lose this? Why did you win? If you lose, write it down. Did you lose because you were chasing, or did you buy high, or did you cut too fast, or you panic sold? But that's fine. Have a red days is fine, but don't have a red weeks or red months. Don't turn 3,000 into 1,000 by forcing plays. For me, if I was to play and I have 2 red plays in the same day, like back to back, I stop out and I'm done. I'm like, you know what? I'll come back tomorrow. Because if I start losing 2 plays in a row, I'm going to revenge trade on that 3rd play, and the 4th and the 5th. By the next thing I know, I'm already down to half of my port. So I try not to force play at all. Just 2 play. If you can make 30% on the first 2 play, and turn that $500 play, $500 play into 700s, I would say stop out, go enjoy your day, go enjoy time with your family. Don't try to force 3,000 into 5,000 in the same day. You're going to get to 5,000 soon, in a week, in a month. That's fine. But once you get to here, it's easier to get to 10,000. But once you hit the 10,000s, it will be quick. It will be super fast to get to 25,000 if you can get yourself, emotionally, detached from trying to overtrade. That's all I can say is just do that. Everybody keeps hearing this one from Warren Buffett's. Like, when you have a red day, especially when you have 2 red days in the stock market, look for stock that you think is going to be red, that's strong. Don't buy crappy stocks. Like, look at like Nvidia, Google, Amazon, the Magnificent Sevens. People that always going to be buying that. Either you buy the shares, or if you buy options, just buy long term, and then wait, and then you sell out when it's green. Don't chase the green day. Like when there's a massive green day, especially when it gap up on Friday for no reason. That's not a good day to chase at the top. If it's green, small, slowly going up, then that's fine, chasing the green. But when everything just gap up $10 in a day, you just don't chase it. And like I said, don't ever FOMO. If silver is up 500 to 600%, do not chase. If you do chase, make sure you have a stop loss, respect the stop loss, and go small. If there's a momentum breakout, it's okay to chase 30%. We're looking for that 200 to 300% breakout. But once it breaks that 300 to 500%, just don't chase. And don't buy everything. No, we don't have unlimited funds. We cannot buy everything. We cannot chase every single stock that's breaking out. We can only buy what we love. For me, it's always going to be NVIDIA, Google, SoFi. I'm still waiting for SoFi to break above $28, $29 above that gap fill when they bought that offering. Once it break out, it will go back to a new high. But for now, it's just going to go up near there. It's just going to die because it's become a big resistance. Either if you have a small portfolio, look to the smaller stuff like SERV, SLS. There's news. There's a lot of momentum breakout. There's news, sound. Stock is in the 10 or APLD. We'll see why it's just moving. You don't have to chase the $600 or $500 like Tesla. If you have the portfolio to play Tesla, then go ahead and play Tesla. But if you don't, look to the smaller stuff. In $150 to $100 range, even $30 stocks can move and make really good money. This is the same thing I keep saying. Make sure you play what you can willing to lose, and diversify. Don't buy the same sector. All 80% of your money into one sector is a bad investment. So never invest all into data center, tech. Have some at least oil, ETF, different ETF. So you never know. If there's a small cap breaking out, you have money to play it. That's why I say always have 50% cash. All right, I know some of you guys already seen this, but just look at different candlesticks. If you ever see a green candle followed by a big red candle, when I keep saying, oh no, as long as it's not a big red candle, I will be bullish. But if it's if I see a green candle followed by a big red candle, that is going to be a bearish play. Now, if you see a big green candle, you see these 3 or 2 small red candle, just know that it's not bearish. It's actually bullish. It's a bullish pennant breaking out. So especially on the 5 minutes, if you see this, that's actually bullish. But if it's on a 1 minute, that's fine too. So you would see if you trade on live with with Mama or me or whoever, we will see this inverted hammer or just as long as the wick is at the bottom, a long wick at the bottom, that's bullish. If the wick is at the on the top of a red candle like a shooting star, that is very bearish. These are all your neutral stocks, meaning it's just like a cross with there's no, meaning on a daily, what does it mean when you see this candle right here? Let's say you see this red candle. It's just an open and closed price, extreme high, extreme low, and what's the price is at currently. So if it's a red candle, meaning the buyer is in control, puts is in control. Versus yes, if you see an opening and you see a big green candle or like this right here, meaning calls the buyers is in control. This is the seller. So the buyer, meaning the people that are buying up these volumes, calls going to be the one that's breaking out, because the longer the wick, the better. If it's a short wick, just know that it's a full momentum breakout. It could after that it's going to be a profit taken the next day. And look for patterns. That's why I say look for this. Whatever you see, it's open and then when it's closed. But as long as the wick depends on the top or the bottom, you just have to know. We like green candle with the wick at the bottom on the daily. Longer the wick, the better. Like this, when you see the green candle followed by a long wick, it's going to push the price back up. When you see an indecision, meaning the next few days, we don't know what it's going to do. And if you see a shooting star, meaning the sellers is in control, there's, puts are going to be the one that's going to pushing this down because the price is pushing the price down. That's bad. And then, bullish flag, I hate this bullish flag. I'd rather see this bullish ascendant triangle because it's making high. It's going to make new low, but it's a smaller low. I hate this bullish flag because it can always go lower and lower until it break out. If you see a bullish flag, yes, these are horrible bullish flag. I'd rather buy on a ascendant triangle because it's, like it's flat straight across and then it's going up. Meaning it's gonna make low, but it's not gonna make lower low. Like no, it's just going lower and then lower. Eventually it's gonna break out. I hate this bullish flag. Ascendant triangle is probably the best breakout. Okay, no, just a few more slides, that's it, and then we're gonna go to charts. You saw SPY in the 1 hour time frame. It's always look at the 1 hour time frame, see what SPY reject. This was on a Monday. I think it was Friday. Friday, Monday, Tuesday, Wednesday, and then Friday, because Thursday we had a vacation holiday. But the first action we are probably always going to miss. The second, we look for that trend line. It's okay to miss the first action. The second action, that's fine. And then you use these two time frame, even on the daily, even playing ODT, you will see SPY usually make at least 3 or 4, trend line before it reverse back up. So if you miss the second action, know that the third action is probably going to be a nice puts. That's why, remember on Wednesday I said puts. And then Friday we took call, and then all of a sudden it hit the 1 hour time frame. Yes, it did go up higher, but it just touched the previous day high. It's it never break above the previous day high to go new high, that pre-market high to go back up. So always zoom out, look to SPY. You're gonna catch at least 2 to 3. We may have bad entry, but if you can wait, be patient, and instead of playing 0 DTE, maybe do 2 DTE or do 1 week out. That's fine. You don't have to play 0 DTE every single day. Let's say if hey, I'm gonna wait. I'm gonna miss this action, but if SPY ever come back to just 1 hour time frame, I'm gonna grab call somewhere up here, and I'm not gonna do ODT. I'm gonna grab 1 week out. Meaning I don't have to worry about the stress of my mental health of playing 0 DTE. I can wait until it hit here. And if I make 30% on a 1 week contract, I'm happy with that. Like, it's nice to make 1,000% to say, hey, I make a 500% play in the 0 TTE.
Apologize, sorry.
Okay. If you have a question, so if you have a 0 DTE, remember that's fine to make 500%. But if you're playing a 1 week contract out and you make 30%, you could go large on this, and you can either average down. You have more time. You won't lose as much. You just snipe, up here. And all you gotta do is look to your left. Like, hey, I'm gonna SPY here, and then when it need to hit yesterday previous day low, I'm gonna sell out right here. That would have been a massive way to play in 3-4 day out. No stress, no, it doesn't affect your health at all. You're gonna make at least 50 to 100%, playing a 1 week contract. Imagine you bid. Would you rather put $1 million? No, let's say you put $10,000 into your SPY play a week out, and you make 100%, or you put a $10,000 into 0 DTE and to see all your price action happening within the first 1 hour of the day. It go up, go down, up and down. Eventually, it break down all the way down. But holding that 10,000, watching that 0 DTE going from 100% to 30%, and all of a sudden making 200% profits. I mean, during that middle action right here, it's a lot of stress. Like it did drop, but imagine this action right here. if you're playing zero DT, it's kind of tough. So here's is how I would always draw a chart. I always draw my 4 resistance. Everyone has their open. Just take this. You don't have to follow me. I always use my previous day high, previous day low. I don't worry about after hours or that's just future trading. I don't have access to that. We don't have access. It's just very low volume. It's just future trading. Ignore that. It's just during regular hours from 9 to 5. So your previous day high, when either whatever it make, and then you got the previous day low, and then you got the pre-market high, pre-market low right here. By looking to your left options, if you look to your left, you see a lot of wick candle, a lot of support where either SPY bounce up or SPY reject and die. That is become a support and resistance. I'll show it to you on SPY too. Just remind me. All right. This was back in December, early December. I think these are some of the potential they've been saying. A lot is in every single hedge funds. They have their own specialty. They write a lot of reports, but it's been the aerospace. If you look just yesterday, all these stocks actually went up. Like nobody played these stocks. Like no one mentioned just on, there's no flow, but it's actually going up. Like if you look 2 years, they all actually went massive on Friday. Like it just made new high. Like yes, there was little dips, but then it went up new high, make new high. So anything in the aerospace, drone would be probably the next potential play. So ARCAD, ACHR is one of them. There's multiple, drone actions, but right now they targeting the big aerospace company, GE, Boeing, like all these different names that you never heard before. Just go to the chart and see what it's doing. It's actually went up and make new high. Yeah, on Friday. So what this mean is it's not retail's buying. Just know that whenever I say, hey, it's not retail's buying, it's the hedge funds buying. Meaning those are the big boy, those are the big $500 million to billion-dollar company buying up these stocks. When retail start buying this name and there's a lot of meme going on, that's when you start jumping out. Because initially silver was buying up not retail, hedge fund was buying up aerospace, silver, and gold. And then all of a sudden the retail, so Wall Street bets start jumping on silver. We had it become a meme stocks play. So if you like VLO, there's always going to be a potential play for that. And with all the oil that's going on, I think that was one of the why they was trying to target VLO, with oil. And this was reported before anything that came out with U.S. invading Venezuela. Because oil has been at the all-time low, but now that the news come out, we don't know if it's going to be southern news. If Iraq 2.0 could be when we invaded. Oil. It was abundant of oil, and then prices break down. Initially, there's going to be a lot of demand for oil, but since it's not the Middle East, it's Venezuela. There's going to be too much oil reserve. Price is going to hit oil. It's going to probably drop down. So you could probably short. That's SOM is an all-time high. ExxonMobil right now is at all-time high, but oil in abundance should be maybe not in a week or two, but probably in a month. It's going to break down. When it does break down, it's going to break down hard, especially with oil. But this was before that we went to war with Venezuela. All right, we should get a few more slides. I know no one loves Bitcoin. Bitcoin is at a pivot point. It's right now the U.S. is not using Bitcoin as a digital assets. but it's in the first steps of the initial stage. They recognize Bitcoin. BlackRock's, they own 700,000 Bitcoin. Actually, 750,000 Bitcoin. They started out buying Bitcoin around 40,000. So for them, they are I know they keep buying up at the very top. They keep buying up more Bitcoin. They first started out at 40,000 for Bitcoin on BlackRock. No, Vanguard, that's the main hedge fund company. They bought it around 40, they bought up 90, they bought up at 100. They keep buying up Bitcoin, but the average is around 90. I think it's like 90,000, but they are still buying up Bitcoin because Uncle Sam will eventually want to be able to collect, tax on these Bitcoin when people buy and sell them. So eventually, either next year, who knows what it's going to do. If you can buy and not look at it, if Bitcoin ever hit around under 90,000 or maybe 80,000, that's where the big hedge funds are buying up these Bitcoin. Yes, don't fall. Meme stocks, ignore that. When it's not meme stocks, is we know when Bitcoin is just is 100,000, people can't buy Bitcoin anymore. They're gonna start jumping into these meme stocks, these meme coin. I get it. Okay. So just wait into 2026. I don't know when it does. Coinbase is at like almost 50% discount. Masters, Michael Saylor, we all know about that guy. His stocks is around $100. Whenever Uncle Sam decided to make Bitcoin as a digital assets, either you can, that's when you start buying, jump in. But right now it's all just hype, just speculative. So we don't know if it's going to make new high. So I'm just watching Bitcoin for 2026. If you guys ever follow what happened in 1933 when the U.S. paid off all their debts, they kill U.S. dollars, they pump gold. So other foreign countries, their goods become more expensive. U.S. goods in theory should go lower, but it's not true because everyone's greedy nowadays. So U.S. goods will become more expensive. Foreign goods become more expensive. Other countries like Europe, China, Asia, their goods become way too expensive. Their inflation just run rampant. But it's easier for us to pay back our debts back to foreign countries. We should be paying back. I hope we are paying back. But how politicians are, we're not going to worry about what's happened. All right, my 2026 picks. These are some of my potential play. Either AVGO, SNPS, Roblox, Robinhood, Uber. These are my potential play. Okay. Anyone have any questions before we start going into the meat and grind? No
Rogi, what trade?
questions?
Yeah, I got.
Go
What
ahead.
trading platform do you use? Use like a Sterling Trader or Speed Trader or just Robinhood or Webull?
Just Webull and Robinhood.
Do you ever get caught up like where you're in a trade and you're trying to get out and you try to sell it and Robinhood doesn't sell it right away and you end up losing because they, when you press sell, it didn't sell. It went into the queue and it stood there like for a good period of time.
Robinhood. See, this is where Robinhood trying to steal your money.
They did
Robinhood,
twice.
when you buy by default, Robinhood by default it goes to auto buy, market fill. So you always buy high. and then when you sell it, it changed back. If you ever look at it, carefully, it's when you're trying to sell it, limit sell, meaning
Ah,
if SPY is breaking down and it passed that point, you don't get to sell out.
right. That's what happened to me twice.
It happened a lot of time. Yes, this is why um, um, I would say when you to look at Weeble, that fill is horrible on Robinhood. So
Hmm.
to buy, I like Weeble because I can limit buy and limit sell. But if you try to panic sell at this, when it's breaking down, you have to market fill that turn on turbo trader and just market fill. Sometimes I'm on live and say, hey, I'm buying this at 60. Usually my fill's at like around 63 to 65
Hmm.
because of Weeble turbo trader is horrible. It never gets you in unless you do a limit buy. If you do a limit buy, you can only, because I'm trying to execute really fast. I'm buying like a 50 contract. I'm buying 30 contract
Right.
automatically. Turbo trader, automatically fill you in whatever the price is at. Now you can turn on the limit buy. You can get in cheap, or you could sell out at the top. But if you have Robinhood, it's always limit sell for some reason.
Yeah, I asked them why did they said that they don't you can't change that. It's a factory setting. That's how they have it.
Yeah.
So
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 you
what
want
about like interactive brokers or speed trader? You never tried those because those are direct. The way I understand it is Robinhood and Webull are like a third party. When you press sell, it goes to another party and then they sell it to the exchange. But like that interactive broker and speed trader, they go directly to the exchange.
so interactive brokers. I don't use that, so I can't say too much. That's usually if you're international. It allows you to trade 4 a.m.
Hmm.
I have access to Swap,
Yeah.
Fidelity, Robinhood, and Webull. You know,
Right.
Fidelity is a dinosaur. It's old. It's really slow. It's if you're looking to play Fidelity, if it's just like it's good charting from. I use it to chart a lot, but as
Hmm.
we're playing it, either Weeble or Toss are the two best. Toss is usually it's the biggest it's the most powerful tool of all.
Right.
It doesn't, but the only problem is you cannot trade 4 a.m. after hours.
Hmm.
Not after hours. I mean pre-market 4 a.m.
Wow. Yeah, Robinhood, they make it so easy to use that that's how they pull you in.
Yes,
It's so easy.
but the only problem is with Robinhood, I can't see the option chain. Like I want to see all the option chains. Like I want to see what's money is being put in. Like in Webull, and I
Right.
can see that. I can open up the particular day. I can see where's the bottoms being hit. Where's the highest order intake. You want to see. You want to buy with those guys. You don't want to be chasing a random price strike where there's no buyer or seller.
Right.
Okay,
Hey,
all right, go ahead.
have you ever looked at Clorox stock? How it was so high and dropped so low?
No, sometimes I miss them all. I don't. No, I don't.
Oh, yeah, because it was. I mean, last year it was like up like 160 or 170, and it dropped all the way down to like 90 or 88.
It does
Now
that.
it's bouncing up.
A lot of stuff did that. Peloton. Um, Peloton was horrible. That was a
Yeah,
meme.
and
That
it's
was a
crazy
meme.
because the Clorox it just dropped like the last probably 4 to 5 months for no reason. There was no bad news on it. It just dropped.
Yeah, that's just particular some reason. Yeah, sometimes we don't know. So
Mhm.
if they don't have revenue, I know Oklahoma hasn't generated any revenue at all, which is kind of bad. But people are buying them up.
You think it goes back to where it was? I mean, it's pretty low.
It is pretty low. It's like it's a filter gap. I thought would be whole around here. The answer is yeah. It's they keep having money to buy new facility, but build a new facility, which is I who someone is I know a few companies are giving them money to build, to ramp up productions, but they have not generated any revenue at all.
That's crazy.
But anyway, all right, let's go to SPY really quick. All right, so option you asked me about support resistance. Yep, and there's always sector rotation too. That's also TradeWise is saying, AIs, like different stocks has been losing value. There's always every few months, there's always a sector rotations. Healthcare has been going up, and then AI was going down for the last since November. Like if during November, if you were to play Lily back in October, November, right here in this month, when we were losing money, if you were to play in the healthcare industry, it actually went up and break a new high. So, there's always going to be a sector rotations. Once they make new high, it's going to, and then a new sector is going to come into play, and then it's going to drop. There might be some period of consolidations and try to make new high, but eventually it's just going to, bounce back to some particular level. It doesn't make all the time high. Only a few stocks that's strong. But all right, Upton, I'm going to answer you first. All I gotta do is look either to your 1 hour or it's 30 minutes. Here's the SMA, my standard SMA. Nothing special. I use the SMA to 10. Just a regular 10 on the 1 hour time frame. Okay. So with SPY or any other stocks, it like to stay above. If it's above the SMA, it's usually going to bounce, make new high. If eventually once it breaks down, like you look at the RSI and you look at this, when it starts losing this, it's going to make new low. Like it's going to, yes, it's trying to make new breakout and make new high, but once it's break down below the SMA, the 1 hour time frame, especially the SMA, it's gonna make new low. Like yes, it does break out a few days here. Pre-market, we don't care about pre-market after hours. That's just, there might be 1 day of breakout, but it's just gonna get pulled back. But once it break out above, it's just gonna stay. It's just gonna bounce above that and just gonna go smooth. So it doesn't take yesterday data or take today data. It's just taking the last 20 days, and it just do the average of that SMA. This one is horrendous on Tesla. Because SPY is the only one that don't respect wick, daily wick, but other stocks they do. So if you look at the SMA on Tesla, once we was at the all-time high, once it break below, you see how the SMA is just say, you touch this, I'm gonna push you down. Like once it break above this SMA in a 1 hour time frame, it's gonna bounce back up. Even if it dips a little bit, it's gonna bounce back up. So that is how you look at the SMA. Now I'm gonna go back to SPY, look at the support and resistance. Now zoom out. So if we were to always look to your left, and when I say left, look to the bigger time frame where there's a lot of wick, where there's a lot of handles being, holding up when it either touch or bounce back up. Okay, so I don't see yes. you always try that 1 hour time frame, right? So Monday, we hopefully to touch this. This is already 1, 2, 3, 4th already. We missed, hit number 1, number 2, number 3. Here's the number 4. Number 5 is like pushing it, but if it break out on number 5 and break above, it's gonna break out, make new high. But if number 5, if you're betting on this, if it bounce back up to around 685, if you bet it's gonna break down again, grab puts right here and see what happens. How it was, when we were losing this new low, look to your left and see where it was. There's a lot of handle. That's 681. There's a lot of, you see 1, 2, there's a lot of multiple support, like at least 3 to 4, where we kind of either push up or where it kind of just, when it touched this, it's reject. So it was right around just 681. You could be off by 50 cents. It's fine. You look to the left, like all the way. You can go as long as you want, like 2 to 3 weeks out. You just go back 2 to 3 weeks. When you start making new low, that's when you have to go back to a month out. But the most you do is about 2 to 3 weeks. You see it touch here. There's a lot of wick. Yes, it's fine, but there's a touch here, touch there. So this 681 is a big support level. It can make new low, but that 681 that's where we get that Wednesday support. It dropped big new low. Yep, it did make new low to all the way, previous day low when it dropped. So every single day, draw this in, and then you can see how to win. All right, now how to play 0 DTE. Whenever you hear the word double top, just know that you want to be cautious. SPY or any stock do not like to be double top or triple top. Whenever it's double bottom, it's usually trying to break out. Right here, there's usually a double top. If you see a double top, this is pre-market high. That's become a support resistance. Meaning SPY want to break out, especially on a 5 minutes candle. It needs to be above this 5-minute candle. You go long. But if it's 1 minute, it's just a lot of wick. That's fine. It's just a lot of. But when you look to the 5 minutes, it never break above. It just wick up, and then it's see that doji candle, neutral candle, and you see how the wick at the top. Remember when we tell you green candle or red candle with the wick at the top is usually bearish. You want the wick to be at the bottom, pushing up like this. You see this 5 minutes. You see this small green body with a long wick. It will push up. You see it, the longer the wick, the better, and especially on a 5 or the daily candle. The 1 minute is just a lot of noise because, like I said, it's a heart attack. But I used a 5 minute for trend. 1 minute is entry level. So this was yesterday. All right, someone asked me, why did I grab call down here? People would grab puts. It lost the VWAP, it lost the 21 EMA. It's early in the day. We at the bottom of the RSI, because if this was at the top of the RSI, it would be easy puts. Like I said, if it's the top of the RSI, you want to grab puts. If it's at the bottom here, we just got, I could say we got lucky. First, remember that SPY breakout, retest. And I said, hey, wait for the retest on SPY. If there was a retest, remember how I said there was like a 3 red candle? And it followed, there's a big green candle followed by 3 red candle. And if it's double bottom, you grab the double bottom retest and you grab the call going back up. On that PowerPoint, remember that I said 3 or 2 green candle. I mean, if it says you see a big red candle, big green candle, followed by 2 red candle, close to here, 2 or 3 red candle. This is this fourth one. It's similar structure, but it's retested itself. So you grab, right here, you grab the call right at this point right here. This was where we bought the call yesterday because it's double bottom. We have bottom of the RSI and it break out to pre-market. And then we grab one more call here for 30%, 50% win. I think it was like 30, 50% we sold early. And then it's double top. If you guys grab the top and say, hey, double top is always bad. If you grab the puts here, that's awesome. But know that, once it's double top, you have to put the stop loss right at purchase price. Yeah. So if we double top here, and I grabbed the second, and I grabbed the puts at, below VWAP. It's like, oh crap, it's like double top. Once it break below, it's gonna make previous day low. It's gonna touch the previous day low right here. And then it's, the RSI, see right here, oversold. And this is the support from yesterday. Gonna grab a call right here, going back up to VWAP rejection again. And if you were to look at the trend line, so like I said, we missed the first action. That's fine. Like, double top here. If you were able to say, hey, double top, I'm going to grab puts. If you say, I missed this actions, let's say you just woke up. Look for the second to look for a trend. Like this is under 5 minutes. See how it reject the VWAP? But let's say you miss this one too. Where would you grab the third play? You would grab the third place here, number 1. Number 2, there's a third try. There's always a third try. Like baseball, you always got that at least 3 try. 3 strike you out. Like this is number 3. Third rejections, it dies down here. You could grab puts right here. This is based off the trend line, not up the RSI, but the trend line. But if you're playing the RSI, you're gonna grab call right here. And then you grab call at the over when it's right here over. This is the second put off the VWAP, but let's say you miss this. This is the third try for puts. Trend line puts, trend line. Like I said, don't go for the 4th or the 5th time. By that time, you already miss it. This is the third puts. If you scalp into 30%, you're gonna win. And SPY, just make it a 1, 2, triple bottom. But that's ODT though. This is only good for the first 2 hours. After that, it's all about playing off the RSI. And also the MAC as well. You look at the MAC when it's turned green, when the signal line's turning over. When the MAC turned green, you see at the bottom, you're gonna grab puts right here. Let's say you grab puts right here. And you put a 30% stop loss. Yes, it did make you high, but if you put a 30% stop loss, it's actually a win. So if you're playing just the RSI, call, you win. Call, you win. Wait for a touch. You're gonna grab puts right here. Yeah, you win on the R side too as well. And then call, you wait into a touch. You don't play the middle sections. Call, you win. Call right around when it break above. You grab the bottom of the R side right here. You win again. Now I did not grab. See how it does? Just big red candle right here. You follow by 3 green candle. What is that? That's a bearish pennant. You want to see the second retest? No, if SPY was to break down right here and it hold and it turned green, then yeah, you grab call right here. So I never grab that call right in the sections. It has to do a similar where it's break out like this, break down, three red, and then double bottom followed by green, and then break above, we grab call. That's fine. That's that's like a similar bullish pennant. This is a bearish pennant right here. Oh, right here, you see how it's by. No, there's a lot of green, red, and then there's a green candle followed by 2 red and then green candle. But the bottom of the R, you look at the R side in both. Right here, it never touched the bottom of that R side. So I mean, it's just a small retest on the puts. You want it to completely touch and go like underneath. So you grab puts, you win. If you grab, you grab call right here around this area. Just touch the bottom. Just think of playing the R side. Like I said, you hold 50% cash to play SPY. So you can split that. If you have 3,000, you put 1,000 into your swing. You have $2,000 left to play ODT. You have 250 per play. You have at least 8 try to play it. So you can, if you hit the first 2, you are done for the day. If you decide to play off just the RSI in a 1 minute, yes, it's a heart attack. But see how many times you win. Like you play here, you win 1, 2, 3. Right here, you actually make money 4th. And then 5. If you play the puts right here, 6. Then at the top here, you put a 30% stop loss. Yeah, it did probably hit 20% stop, but I don't think it ever hit a 30% stop loss. 7. All the way down to 7, you probably scalp. Like, hey, I'm hit 30%, I'm taking my money. And then bottom here, 8. And then at the number 9, probably the price action sucks. Because massive MAC, you don't want to touch the massive green MAC right here. That's just terrible. You want to wait until it's actually reverse itself. Like you do not want to chase big green candle on the MAC. You want to chase when it starts turning less green and going red, going down. So right here would be a bad entry on puts because it's still high above the signal line. You want to wait right here. You could grab puts. Let's say grab puts here, you would probably lose. Yeah, this is late of the day. Let's say I grab puts right here because it's oversold. I lose. But I'm going to try again. It's at the top again. It's turning red. I'm going to grab puts right here. And then until it finally at the bottom here. So you only lost for 1. If you play in the the 1 minute RSI, or you want to call it the TTF, similar to a TTF, you actually win. Okay. Now, if you want to use the orb indicator, look at this one. Orb AVGO flux charts. That's the 15-minute orb charts. That's the one that's now when you see it. So what the orb does is you want to buy puts off this orb low. Remember, it takes 15 minutes for the orb to put in. So you grab puts off the orb right here. Similar when it touches closer here, you can put it's actually playing the old, but that's the 15 minutes old level. You grab call when it break above, when it break below, you grab puts. Okay. All right. I'm not gonna remove this. All right, trade wife. I use the EMA versus the MA. My regular EMA is just a standard, nothing special. I use the 2050, or you can do just moving, this one, you can customize it. I just use the standard 2050, 100, 200s. I do not use the 9 or the 8 EMA. Some people use it. It's just too much noise for me. So I use the 9 and the 8. If it's close to the 21, that's close enough. I know it's close enough for that. I close out the VWAP. So I use the 4 hours and the daily for Magnificent 7 of any large cap. As long as if I see it's at the 200s or wherever it bounced to 100, I like Apple. If I was to play, I like it's at the 100 EMA. Strong stock is Google. It's one of the most powerful stocks. I would have grabbed Apple right here too at the 270. When it touched the 100 EMA, I would have grabbed call right around here. Yes, I would lose. My contract would be losing value, $3. But looking to your left, you see how it's always touched to at least the 200. So there's a lot of support. Support at the 200. There's a lot of resistance at the 200. There's chance that it can go to the 200s and then bounce. Except for Google. Google never test the 200 ever, except for back in June when Trump killed the market. June and May, that's when Trump was killing the market. But without Trump, it tests the 100s on a 4-hour time frame. Well, if you can ever get lower than the 100 EMA, now divergence. Okay. With diversion cheat sheets, you have to go look for particular level. Either if its price is breaking down, not this one. Where's my I could do an 8-9. I'd rather do this. In theory, it should break above and then make new high. Depends on how it's supposed to look. If this is a bullish, no, this is a regular bullish divergence. Now, Roblox oversold. Yes, it's making. This is a terrible. Like I said, this is a terrible bullish breakout because it's making new low, and it could always go make new low before the breakout. But it is a bullish divergence. I'd rather look for ascending triangle breakout. Those are the best one to buy. let me see if I can find it. This is okay. Where is that? Where's the charts? Really quick. This is the bullish flag. Okay. I'm trying to find a bullish flag. This is like one of the worst you want to ever touch. Okay. Yep. Heiken, I do have that, but I don't. The smooth Heiken candle. Yeah. You mean just one? Talking about just one Heiken? Sorry. What about using Heiken Ash in 1 minute to check the chart trend momentum? Oh, you're talking about the Heiken? Yeah, that's a different mindset. That's a different type of candle. Oh, you're talking about a different candle that we use instead of using the regular solid body. Okay. I don't use it. If you use to the Heiken or whatever, like this is just use to the Heiken, go ahead and use it. Indicator, that doesn't indicate the candle. Not the candle templates, no. I know I can do that on Webull. Webull is so, I'm used to Webull. All right, let's looking at size in the ODT. Do you size the same for each one you go into, or you increase the size the next one? No, Gerald, you want to buy the first play should be at least the first and second should be your biggest size. I would always try 250 until you know what you are doing. I never highly recommend anyone to size in the first play. Like the first play should be at least smaller size. Okay. So Gerald, I would always try with 250 per play until you decide to have a bigger port. And remember, you should play with money that you do not need. If you need money for bills, for rent, it will stop you from sizing in accordingly. You will FOMO. You will be afraid to take risk. So if you can risk and play up level, instead of playing ODT, do 1DT, do 2DTE, and say, you know what, if SPY ever hit this level, I'm just going to grab puts because I know it's been rejected this on a 1 hour time frame. Like if SPY was to hit here on Friday, if you have money that you don't need, you can size in big in the first play, or at least the second play, but never the third or the fourth play, because you see how it's like, here's the first rejection, the second, and the third, it's just not making the bigger low like you want. If you miss the first action, the second should be your second big, size. But the third or fourth is where you start going in smaller. Okay. There's a bullish divergence indicated from RSI, or you might be trying. Yeah, I think I don't. Are you talking about just divergence? Long-term, short-term, and this one? Sadiq, oh, that's probably a different indicator, because I know you have a lot more indicator than I do. That actually tell you when there's a bullish divergence. This one. Okay. Let me see if it works. Okay, let me see if I let's go to hey. Okay. That would save me time. I've been using this old school just by looking at the chart on the daily. Okay, this is actually helpful. Yeah, because I saw there was a bullish divergence on RSI, but thank you. Thank you so much. This actually saved me. Because I know there was a bullish divergence here, and on the daily it was over. That's kind of cool. That's kind of neat. Thanks. I learned something new every single day. But okay. Yeah, it does make it. I know it's just a bullish diversion, but it's just making new low. I hate this bullish, breakout, because it's making new low, and it's keep. If you can find stock like let's say UPS. I don't know if it's a UPS. Yes, UPS has the same thing. You see how there's like 1, 2, 3. So this is called ascendant triangle. I rather take play that's this ascendant triangle, meaning it's making high, but it's dropping low, but the lower is not as low like with Roblox. Like Roblox is making new low, like this is making low before it's actually breakout. But if you can find ascendant triangle breakout, once it break above this line, neckline, we call it this flat line right here, it's actually a bullish breakout. Look for stock with an ascendant triangle versus a bullish, a bullish wedge of patterns. Okay, I'm gonna add that. I'm gonna add this to my favorites. And it doesn't give you the daily. It doesn't give you the signal line, but it's actually telling you what's the divergence. Okay, I'll use it to my main, the 1 hour supply zone. Yeah. Okay. See this ascendant triangle right here? I like this one. I hate this bullish flag. It's just terrible. It's just making new low before it make a new high. Yeah, this is the one I like to buy off. If I ever see this, I try to buy it when I hit the lower candle, lower line. I just buy it and just once it break above this flat line right here, it's gonna break out. Now we just need, all right, let's say potential play. So these are the 2026 pick by some of the big guys. They love these stocks right here. I know energy is on the list as well. So energies is going to be, they haven't mentioned any name yet. We don't know who are they targeting. They're just saying energy stocks. So it could be FSLR. On Friday, it broke out. See how it has the FSLR? I don't know if you saw this right here. So if you look at that pattern, what is that? That's the same as an ascending triangle too. So you got two things for going on with for solar. So energy stocks, look for patterns. Ascending triangle, just buy it when it touched the bottom. Eventually it's going to break out. Okay, so that's one of the play. And I know they have AVGO. So anyone asked me about, anyone need to show you how to use the Fibonacci level or no? It's just for my Fibonacci. I just, so to go to your daily, go about 2 weeks back. Yes, you can go all the way back to the historical data, but most of the time it's usually 2 to 3 weeks within a month. The most you want to do is go to at least a month back. Don't need to go further back than that. Except for CRWV, where it's a new stock. Yeah, there's still a call wall that then it's just refused to give up. So this is a brand new stock. So you have to take the whole data. So what does that mean? People like to buy this around the 23. When it break above the 35 to the 60 zone is a full breakout. But the 23, right here is like a retest. That's just my level. And I think I'm looking, that's just the Fibonacci level, right? Now, if you look to the daily retest, look at that. It's like so close to that Fibonacci level. So let's say once AVGO break out and make new high, I'm going back to here. Just go to the daily, go to about the top to the bottom. People, no, as long as it's hold a 23 right here, so 344. Now 323 is the bottom. If it hit the 323 retest, that is extreme 1 month. Let's say you could hit here and it start falling down. You want to wait the Fibonacci. That was when you start buying back. Like I said, you don't need to do that. Just take it to extreme top, go to the extreme bottom. give or take. So 23 right here. Now you can buy at the extreme bottom. But if you buy here, that's the closest you want to buy is the particular level. Then 345. And now 358 is the breakout level. But once it hit the 60 zone right here, 380, it's a full breakout back to the up top. That's using the Fibonacci level. Some people use it. I mean, I do use it sometimes too. So this is kind of cool. There. There's RSI divergence. Okay, cool. So RBLX, AVGO. So I haven't looked. I follow. These are probably going to be what I'm going to be looking at Robinhood, Uber, RBLX, AVGO. All right, let me go to. Yeah, we missed that one. So I think we were looking at that. We were talking about, was it the 280? So MU. Right here, the earning play. I think it's gap up overnight. I'm just going to take a month out. I don't need to go back that far. So let's say we break out above 126, right? So once it breaks out 126, it's going to be 308. Now, if you were to play just, I want to move this away from so I can see what I'm looking at. Cancel. Okay. And here's the fib, trend based of extensions. Just to play a breakout of oops. You can go all the way down here too as well when it breaks below. Where's the last resistance to the high and then to a previous low. It's just taking a few days power week data with the Fibonacci extensions. The full retracement is about a month data. We can go to the whole weekly, to the whole, don't go a year date. That's just too far out. This is about 1 month. This is about a week to 2 weeks out. That's the most I go for these two. A month, 1 to 2 weeks data. Okay, the 262. Remember I said 285. I was watching the 285 breakout. It's gonna be off a little bit. That's fine. Yeah, 285. I was looking at the 285. Remember I said, hey, look for the 285 breakout. It's gonna make new high. 324. Then 360. If it ever does get to that, it's gonna become a support. Like when it break above here, above 285, it become a support. Like right here, that on the daily candle, it stay above the 285. we have this earning gap up. Yep. So 360. That would be crazy if it does, though, but it has to break out 325 breakout and hold on the daily. There might be a retest of around 325. So that's the Fibonacci extensions to find out new high versus retracements. Where do you buy back on when it starts falling down? Okay, anyone have any other questions? So if you need to take a screenshot of this, go ahead. These are some of the potential 2026 play. I'm gonna try this. I was looking at RBLX and I look at FSLR. So UPS, you saw that like October on the daily time frame, even you go into the 4-hour time frame, it is an ascending triangle breakout above when it's already broke out back here. It doesn't have to be exact, but if it ever hit the ascending triangle under this trend line, if you buy with time, it's gonna break out. Like it's already breaking new high. Now FedEx already breaking new high. We played this maybe a couple months ago. Remember we showed UPS, and now UPS that was FedEx, and now UPS is starting its own ascending triangle, breaking out. So it just started breaking out right here. If you decide to buy this, either start buying it, but if it ever dips below here, yes, you're going to cut below the 98, 98. So it's only a $2 variance, there's a small stop loss. So UPS is a highly candidate for a full breakout. And how high does it want to break out? I mean, I'll take back to like, you're looking at almost 150% to go back up all the way high. If the momentum is there, yes, I do hold it, but I usually take my profits that same day. I'm not greedy. Like I'll go large. Like I'll play. Instead of my zero DTE, I'll strap like $2,000 unless I'm feeling bearish or bullish. It was like September 11. Next time September 11, I think September 11. I think I put 100% of my account into call, all of it. Then I play short term. We never had a red day except for 2001. But if you play in 7 to 14 days, let's see, SPY again. I would hold, but not at just right here. because if you bought 7 days at the top here, it would have given you at least 100%, 200% that same day. 100%. You slap like $10,000 right here at the top. You make 100%. That's $10,000. That's just insane to hold it for $1 million play. Remember this. Here's number one. We missed just first movement. Here's the second. It bounced back up. Here's the third. SPY has a chance to break above and bounce back up from here on next week. Like I said, we missed the first, the second bounce. We probably missed this. That's fine. But it might retest here. Not ABCD. I just want. That's crazy pattern stuff. Let's just do that. So now it's making that. It may break. I don't know when, but it does. That is a bearish pattern, though. I mean, there's probably a name for this one as well. There's a candle patterns. It's a pennant. I forgot what it's called. I would have to say it's a bearish pennant, or it's a descendant. No, it's not a descendant. It's a no, it's similar to a descendant triangle, but it's a bearish pennant. Or so that's your. Let me look it up. Let me Google. Just search this up. What's it called? Bearish pattern. Descendant. This is a descendant of the symmetrical triangle. That's what it's called. There you go. Okay, I know it's a bearish pattern, but it's this one right here. Descendant. So if it touch, so I'm gonna take a screenshot of this, and I'm gonna save it. So we got either descendant or symmetrical. So that's what I got. If it break out, SPY's the only one that can break out too, but we will see what this is gonna do though. If it's gonna, if it's touch yes and reject right here, if it reject below, it's gonna be a symmetrical triangle. And where do we target? We target this 671. There's nothing left, that's where we're gonna target. But so this is not a full. All right, so this is, if it's one big drop soon, do we need to get prepared? Yes, I would prepare. If we were to lose this 680 zone right here, Because if you look at this, we are still, it could break out and break new high. But if this then does not break out right around here, I don't know when, probably in the next 3 days, next few days, very soon. Take puts. If it loses 680, like right here, aim for 671. You know, in the last few days, there was a lot of puts for January 16, 662. I mean, that's way out the money. And anyone that's have access to black box, where's my? Yeah, ignore the big, you know, these 200, 100,000, that's just big, that's just small money. You're going to see a lot, you know, there's a lot more call, and there's puts too. Now, anyone that have access to, yes, you say, which one should I look at? So you want to see the puts, the call being up the money. Right now, SPY's at 680. You want to see them buy and SPY at like 689, 740. But they, you know, you want to buy them short terms. You want to see the short terms out the money, meaning those are the bullish play. Like this one would be a bullish breakout. You can say, all right, like these 690 is deep in the money. There's no data decay for them. There's nothing. That's just been. But now I'm seeing this, you know, March 20. These are what the whales would play. These are the big money that would play. They want to play. You want to see just 640. They buying just, you know, out the money puts. There's a lot more puts that call. You know, and then you see these yellow versus purple versus white. Why is this a normal? No, it's not. It's just a standard play. I want to, if I remember correctly, I may be wrong. Correct me if I'm wrong, but the yellow one, a high volume play. The purple is high. The the stock has high volume. I had to find if I'm right. This is the high open interest. That's the high volume that people play. Purple meaning there's a, you know, that's when the stock has a lot of volume being bought up or being sold. When you see a lot more purple, also the yellow one is also could be a COVID sales put, COVID sales call as well, especially during OPEX. You would see this in the 20, 30 millions. That's just that's just people putting this COVID sales call and COVID sales put. It's finally showing their play. You see that during OPEX. Now you want to look at the purple one. Purple one is just, you know, people are high volume play. Let's look at SLS. I think that was. So FLS was one of them. You would that one. You would, you know, you want to see an unusual whale. Not by looking at this. You cannot see it from looking at this. You have they usually buy out the money. Like let's go me. Let me take a put a play. I want to see the big, massive. They stick it like a sore thumb when it's like completely out the money. I'm not talking about 1 or 2 millions. The 10 millions is one. So this would be a bearish. It looked like a bearish play, right? I mean, 310 is not sticking out. I want to see the three. If I can find 3.6, like really high money. They're not showing it. Okay, this one right here. This call, COVID sells. Okay, this was really been a bearish play. Sticking up. So you see Google at 307 and they buy it into 165. They sell just call 165. They expecting Google to dump. This was back on 12/22. You want to see it out the money. Like they willing to, if it's puts, like COVID sells puts, they want the price to go up. They don't have any. There's nobody that's bearish. I mean, bullish on Google. You want to see the puts really high out the money, like a 400 Google, and it's a puts, and it's large money. Like 380 puts. Like these right here, 350. Large money puts. They want it to go up. Like these corporate sales puts, like this. So either call deep in the money, meaning they want it to be bearish, but it's really around right here, 350, and there's a lot of puts out the money. Like 350. If it was like 300s, Google, that's bearish. But if it's puts 350, they are bullish on Google. It's also by looking at unusual way, I will show you a little bit better. But I'll show you this one on black box for today. So you don't have with so much data. Like, what am I looking at? Well, black box and unusual whale. What's the term? What do you mean? COVID sells puts, COVID sells call? It's CSP. Just know that COVID sells put is called bullish. Please correct me if I'm wrong. I know I might. It's like a credit puts. If you ever see a credit puts on SPY, yeah. So they buy really deep. They want the price to go up, so they don't have to pay the strike. They are willing to either collect the premium or collect the shares if the price go up. I know Chris say he does that a lot. Yeah, if I can ever get Chrissy to come online, he can explain that in a much better. Oh, that's all he does. All he does is COVID sells. He just sells puts, sells call. He would buy the shares, willing to either lose. He does that a lot of times. That is if you have big puts, willing to you can buy it. I think you can ask Dog. He bought 100 shares of SPY at $64,000. He got exercise on that one. He bought SPY 640. I think was the one day he said, hey, he even wrote like, hey, I bought SPY 640 when it was like super low in the money. And then if SPY went up, expired, he thought they would exercise it for him automatically to sell it for him. Instead, they gave him the $64,000 worth of SPY. Like he just bought up 100 shares of SPY, $64, $640 each. Okay. Any other questions? Hopefully we can find some potential play. Bitcoins are my main watch list, but not fully sized in. Not that oil is breaking out. We're going to war. I don't know what's going to do. Just data. One sector you want to look at is Cisco. Cisco is only one stock by itself. It's actually holding up telecommunications stocks up. One of them, Cisco Light, Cien, CIEN. Man, this is insane. October, $158 stocks is now almost 400s. Light, CIEN. These are all in the same sectors. I mean, there's more than this one. I think FN is also one of them. These are optical stocks for data centers. Yeah, optical, not optical like glasses, but optical for data centers. So this has been one of the main hot topic. I mean, you look at this since August, not just August, let's just say November. It's already up. Look at that, $60 for Light, Cien. But Light is insane. Light is almost over 100%, 100%. Poet is one of them too. Yep, that's the one. Yeah, that's on the sort of in the list of optical stocks. But again, this one is a small cap. Let me see if there's any patterns for this one. This used to be a $1 stocks since February, March. I could say it's right about here. Yeah, close enough to the. So this one need at least a 750. I would say at least a 780 breakout. I would like it to break out this angle. So look at optical stocks. Poet is one, Cien. If you need me to write down and then say, hey, I'm gonna put this on your watch list, and then start charting them. If you ever see a ascendant triangle, just risk it. There's more to the upside. Yes, it can always new low if it break down. That's fine. But if it's going to break out more than it does, with volume. It does momentum breakout. Ascendant triangle are very bullish. AMD almost had an ascendant triangle breakout. This is a descendant triangle breakdown, actually. And then so it has a double bottom right here. You remember how we keep saying double bottom? It's usually trying to break out. If it's a double top, it's like to break down. Just know that. Vice versa. Okay, so optical sector, and then I'm not saying Bitcoin yet, not yet, but that's my main watch list for 2026. I know we already have our aerospace, but going into the Olympic, and then with drone probably could be the next. Not yet. I know there's a lot of people talking about, right now they are talking all the big stocks, aerospace. But once aerospace start cooling down, they're going to target the next sector would be drone. Is cheaper. But that's all speculative. So just put it on your watch list. I would say AllCat is cheap right now. And it does have a parallel breakout. Right over here. So that's one sector that may be targeted, but it's not there yet. Is drone. But energy stocks, that's cool. Bullish. Thank you. So this is kind of helpful with RSI divergence and bearish divergence. Yeah, we have a daily oversold. I think I bought it here. Thinking I bought the bottom of folklore I think I have folklore. Double bottom. Because I saw the one, I saw the second. I'm like, okay, I'm thinking I got the bottom of energy, except they just make a new low. EOSE. EOSE never touched the daily bottom. So it's all about energies, nuclear stocks. They need it for the data center. So if you can use charts and you can see use this black box, or whatever you want to use, that 100,000 is a lot of money, but you want to see the big guys that's playing millions or half a millions. Right, this one $20 out the money. That is super bullish for 2028. And they buy deep in the money. Right now it's only $12 to 15, and they buy it at 15. Okay, with NVIDIA. Let me check on NVIDIA really quick. CES coming up, and it's been stuck at the 172. I have to NVIDIA. So NVIDIA around 170 is always going to be a buy zone. Like around 170, just buy it. It can go lower, but just from 170 to like around, let's see, 1 hour to check 3 times. I'm talking about this little trend right here too. We break above. So you missed the first, the second. Here's the third drop on NVIDIA. You know how it bounced up? You missed the first actions. The second right here, and the third one, it break above, and now it's consolidating. Yeah, it's since July. It's stuck at that 170 zone. So whenever you have these big drop in a day, buy an out the money contract, the whiplash will kill your contract. But also, if you can wait to hit around 170 on a big giant drop like this, and you buy call deep in the money, it'll go back to like $20, $10 either up, you sell out, because yeah, these giant whiplash just kill contract. Yeah, this is the zone I would add around 160 to 175. It's always going to be an add zone right here. To 180, even 183 is a high risk. Do not buy above 183. But this area, just buy all your call, buy call here. To here to even here is still a big line around 175 is always going to be a buy call for NVIDIA. I mean, since July of 2025. If it does ever drop underneath, yeah, we would have cut everything, but that's like 5 months of data. So it's dropped here. It's only the 1 December. Let me see on the daily candle. Consolidate. That's a hard rejection candle right here on the daily. You see how it has that similar candle right here? That's double top. You see how NVIDIA has a double top on the daily? what did we say? You know, anything that ever double top, do not like to go back new high. It's always reject, especially the daily candles like this with the wick shooting star. That's really nasty. So it's still a similar structure right now. It could be a south event next week where people think it's going to be breaking out. Probably not with this candle on the daily. Like around 190, like around 190, I'll target puts. I would play short-term puts at long-term call. This week, like around 195, 190, yes, rejecting that. 193 to between 193 to 195. Yep, it is a bearish candle on a daily. So it opened here at the top. It closed, the closing price is right there at 188. Yesterday it went all the way high as almost as 190, 193. The low was 188. So that's how you look at the daily candle. It, the top is where it opened. The red is where it's closed. It opened high, closed lower than the opening price. It did go all the way up to 193. Let me see if that's correct. So it opened. Market open 193. Yep, open. It hit all the way to 190, almost 193. And then it went down and would make new low. 188. That's how you look at the daily candle. So going forward, you can see it's open here, it closed here, and then the daily candle is where it shows like the highest it reached. Same with this. So it's a small candle. This could be an even shooting star right here. That's the candle. It looks exactly like this. We don't like when there's a short body and the wick is at the top. Okay. Can you look at IONQ? I think I'm in this one. IONQ. There was a so this one was bought up by a giant whale, I think like 3 days ago. He's the one that bought the Intel call, the same guy. Bought up Intel, Apple, Google. Not Google. He bought Apple a couple of weeks ago. Intel, he got in. There's a few other stocks. He got into Vail as well. $45, 6.7. Ew. You mean this one right here? Damn it. Font. Yeah, 200,000. Okay, let's stick at that. That's not bearish. This one is bearish right here. This one is massive bearish. On January 2nd. And then there's a call right here. Smaller size call versus massive. Yep. Same. So there are call and puts. It's just like this one's sticking out like a sore thumb. Yeah, because I saw this massive call. Yeah, I think because of NVIDIA, because Jeff Jensen, he hates quantum stocks. That's his main competitors. Chipotle, that's what I think of Netflix. Chipotle. Anyone remembers Chipotle when it was $1,000 stocks before the split? Chipotle just used to be $1,000, $1,600, I believe, and they have like a 20-to-1 split. Or 100-to-1 split. And now it just keeps losing. Netflix, I love Netflix itself. But it has the same treatments as Chipotle. Jeez. It lost on the daily. Does not have any play at all. Yeah, this one they should have noted the split. I'm just gonna say that one. It's since ever the split, it's just got the really bad treatment. It lost that breakout right here. It should have been a breakout right here. And, make a new high. I think we are trying to guess at the 100s. But it is losing. close to around there. So that's Netflix for you. Nope, you got the crazy dead cross going on. The 50s about across underneath to 200s. That's a fully dead cross. You already got that on. You already got that since it's lost that back in October. Let me see. Where would I target for upside? We had the middle candle. So we underneath this middle candle, above the middle is a break above. Below this 90 is probably going to be 80, close to 83. Yep, close to short it until it hits 83. Let's go to let me see where I would target puts. December 25th. It's already lost weight that. We're never going to catch that bottom. I want to see if this didn't stick anywhere. You get one here. The second set of puts. Or your third set of puts is if it ever hit there. But below just middle sections. And if it hits right here in the next day, in the next week, around January 9th, you know how we have this little angle? If it drop below, just go down, make new low. If it lose 92, so if you want to buy puts right now, above 92 is your stop loss. If it 92 buy puts, to stop out would be around like 94, 95, and then grab puts underneath until there's some news, until there's, oh God, that thing has really low float. Not Apple, ABB. Okay. Yeah, these are the one that's that's just way too much puts. $90. Oh man, I want to see something that's like 80 puts. 90 puts, that's bearish. Yeah, they could. Yeah, they buy it out the money. Like this one is a bearish play right here. $70. That's super bearish. These guys are probably don't care about data. They just want to make 30%. They slap in. That's a lot of money, like almost 100 millions in puts. You can say this is almost like 100. Added up like 50 million inputs out the money. They will not get the 2,000% puts that they could, that most of us want. They will still make like 30 to 50% puts. Less data decay. If there was only one, that would be a Cobra sales put. When there's like multiple like this, that's just too many puts sticking out. If it's just one or two, that would be a Cobra sales put, Cobra sales call. Could be a sales puts. If there's only one by itself, that's usually a sales put, sales call. But when there's multiple, like all of this, they want to buy this 17 million. That's not even OPEC dates. Yeah, you want to see the OPEX like the week of the month around when quit hot witching hours. That's the third Friday. So they're gonna still make 10, 20% profits at 93. They bought 110 puts. This is just straight up puts. There's a lot of it too. What's the X say? That's just one dude. January 2nd. Okay. That's one tiny little money. $200. Yep, this is the one that he saw. January 6th, 92. Comparing against this guy's 91 puts for 1 million. 200,000. I mean, there's more puts than call. I mean, this one is super bearish right here. So that's what I think of Netflix. I mean, just play the chart for now and see what happens. Okay. So if it drop underneath this line right here, 90, I would have put right here 91. Remember what this bearish pattern? So you look to compare the chart, right? You see this right here without the EMA. You can see it make a new low. I would say this is probably the best one right here of this all. The descending triangle. Up below this line, this puts is this a support level? Yes, it is, but it's not only one. $83 is the real support if it loses that around 82 to 85. Do that 1, 2, 3, and 4. I'll bet on the bearish on this one. All right, next stocks. Yeah, that was entered into S&P. $16, they're getting at 17. Most recent is 1588. Wow, that's really out the money. It's all 2027 data. That's my there's 2. There's a giant cup. It's still like an ugly inverse head and shoulder. Or you could, right here you can start saying this is a cup, and that's, it's not really a handle. The handle would be right here. So I would like to target call right around here. This is the neckline. It's 1474. Path. It's downtrended. Let's look at the old data. So this is your large 4 hours inverse head and shoulder. So from 1560, there's a dollar move down to the downside. But if you buy now, I mean, I would target around here. That would be your neckline. Back to the 1918 zone. That's what I would do, and it's all all the money is in 2027. Or so that's where they all have the most of the money is in 2028. Just except for this one, that was a long time ago, a week ago. But everything else is extremely long dated NBIS. Okay, so if you have access to black box and usual whale, do both. Look at the flow and then look at your charts to see where it's aligned. Can you go short term or can you go long term? SNPS puts a soul out. SNPS except for this one. No, that's just, yeah, $7 puts, that's bearish. But majority is in call. What the heck is 190? Anyone seeing this? It's 190. Let me check what price is that? NBIS May 15 call 190. Ooh, the spread. So let's say he got in around 250 per contract. Okay. All right. So I know it's bullish. So they get in at this point. I have just a long time ago, 75 breakout. Eight. It it filled the gap, came down to fill the gap here. Bounce off the 200 EMA on the daily at 75. Now, if you were to buy now, it is, don't take this out. It all built. Daily, not, I'm looking at the daily retest 75 bullish, okay. Right in the middle of the RSI. So it's above, it needs to break above 90 because we retested 95, 75 right here, the gap fill. The bigger time frame. I think I drew it for a reason. Why did I drew it? Oh, it bounced right off that daily. This was the initial, this white line, it's like the longer time frame where it bounced back off with Nibis. This was back in May. Okay, so 90 zone need to break out. I would, if you can get around 80, if it retest, it doesn't have any patterns or any, right? Yeah. Either 75 or 80. If it retests out around 82, either 82 or you grab the breakout. It's above. There's a lot of FVG right here is around 90 zone, but the full breakout is around 90. I would say around 95. That's the real breakout on Nippus. So there you go. That's, right now it's all speculative. There's no, I know they have huge data center. So it's 50-50, but there's more money is in March. Wow. 100 call. But in 2 weeks out. Just one outrageous 100 call. You know what? I'll take a look at this. It's $300. Someone grabbed 600 contract yesterday. Now, these short dates call. He's the yellow one. If you see a purple one, that's usually more better. But this is back in a few days ago. 86 puts. But he bought $70 puts. Yeah, that's meaning he's not super bearish on it. Actually, no, he's super bearish on Nippus. Yeah, this one was bought on the 29th. So bought right here. Yeah, probably already got the money. Double bottom. And now we're looking at the future stuff. This one is so far out, we're not going to care. We're going to look at the short dates. These 5 right here. Out the money. Even this guy's out the money. January 16, 95. Hey, you know what? That's a good gamble. I will put on a watch list for next week. It does have that. There's no pattern to this one. Unless someone can see it. I don't. Except for this. It's not an ascendant triangle breaking out. I mean, it could be. But it's only 2. It's not a real ascendant triangle. Like I said, we're not going to catch the first move. We're going to miss the second to find that, trend line. So it's going to break out the next week, probably retest. So wait for buy shares, buy options is probably risk it outplay options. And then when it retests, we will go long on this one on the 3rd try. Yeah, because the real breakout is around 90, is $100. That's $10 move. Okay, all right. Anyone have any other questions? If not, I'm going to let you guys have a good, enjoy your weekend. And my main target for this, where's my PowerPoint presentations? Yep, if not, we'd look at this one, CRWV. It's, I think we're looking at just, it's just bouncing off right here at the low 70. It's just making high, low, high, low. It's just making a lower high. So it's not actually, it's actually bearish, Casey. Because you see how the green candle, it's hot, it's bigger here than make a new low. It's just 1, 2. It is for, it does an RS divergence, double bottom, a similar move, not until it completely break out of this $91. So if you want to buy, close to $67, $70 zone, because you have the one double bottom, triple bottom, it is trying to break out. Triple bottom around $70, or you take the $90 breakout. I don't see any. Yep. I don't see, I don't see anything that's going to say I should buy call on CRWV. It's all, this is the one guy. Yeah, there's too much call and puts. It's 50-50 on call and puts, so it's not super great. All right, Casey, hopefully that helped. The answer is yeah, either $70, 65, or $90 breakout. But right here, it's all 50-50. Because it's making new high, and then high, it's making high low. I mean, the low is going lower. Not good. All right, guys and gal, have a good night. Have a good weekend.